Right, so South African consumers all under pressure at the moment. Last week you saw that massive, some say unexpected 50 basis point increase by the Reserve Bank. There was a popular belief it was going to be 25%, but that one hurt. It's now taken the prime lending rate to 11.25%. And then Tumza was just talking about this a moment ago. The first of this month, on Saturday, we saw an 18% hike in the electricity tariff. But there is some relief. And in case you're wondering, it's going to be the petrol price, which is set to decrease on Wednesday, just a little bit. I might have said increase during those headlines. Forgive me, I actually meant decrease. My fault this early on a Monday. Well, TPN Credit Bureau's Waldo Marcus joining us this morning. Hello to you, Waldo. And it's a bit of a mixed bag. I'm not too sure, should we be happy about a fuel price decrease this week? Because let's be honest, interest rates have gone up and also electricity tariffs. I'm not too sure what most people are thinking and feeling this morning. How are you feeling if you were a regular consumer?
Good morning, Gareth. Yes, it's a bit of good news that this petrol price is decreasing. It's very much needed. Yes, it was a bit of a surprise that we went up 50 basis points compared to 25. But if you dig a little bit deeper, it was kind of expected. We have seen the Producers Price Index creeping up 0.65% at the start of this year. And that, of course, is going to filter down to the consumer. The consumer already under huge pressure. And now this interest rate hike is going to place even more pressure on them. And considering that if we look at our rental data from TPN Credit Bureau, we're seeing an uptick and a continuation of this uptick in rental escalations, which, of course, impacts a market that might not necessarily have a bond that they need to repay, which, of course, is the biggest impact on the consumer. But those rental escalations are going to continue while this interest rate is going to affect everything else that we used to borrow against. And yeah, the fuel price, a little bit of a relief. But again, it's not going to be enough to bring inflation to where it needs to be for the Reserve Bank to ease up on its interest rate hike cycle.
And now for those who know you from TPN Credit Bureau, of course, a big focus for your organization, Waldo, on property and businesses as well. And you mentioned the rental sector, the rental market, if you will. Are we, or are you rather, seeing a lot of people maybe considering selling their houses, selling their properties, getting out of the bond market because they can't make that commitment each month, and rather moving into rental? So is now a good time to be a landlord and have some rentals sitting around?
I do think it's a good time to be, the rental market. It's every time the interest rate goes up, there is a smaller portion of the market that is going to move into property ownership. And we're seeing healthier escalations coming through post-COVID. It's a bit early to say how, the defaults that we're going to see due to these increased interest rates on those that already have a bond. But it's definitely going to put a lot of strain on those people that bought at the low interest rate prices during the COVID period. And we saw that spike of properties moving in the market. And that has already started slowing down towards the end of last year and the first quarter of this year. We're definitely seeing a slowdown of people purchasing it. It's going to take some time to see how that then filters into the market where people have to offload their properties, considering now that we have this Eskom tariff increase that took place on the 1st of April, and then the municipal ones going into June, July. That is going to add additional pressure on households. So yes, that is going to be an interesting couple of months for us ahead to keep a very close eye on how consumers are behaving around these interest rate hikes, but also then these Eskom tariffs hikes, which is double ditch. It's going to affect all parts of society, including producers that need to produce these products. And as I mentioned, the PPI is already up, and that's early signs for us that the inflation is not going to start behaving itself.
No, it's certainly not. There's an expectation come May, in fact, Waldo, I'm sure you'll know this, but for those who didn't hear our discussion last week, an expectation of 25 basis points, another increase come May as well. That's the expectation. Hopefully it's not 50 basis points this time, but we're not at that ceiling just yet. Okay, so we've spoken residential, the rental and the owners of residential properties. What's the business element looking like as well? Because we know during COVID how many people had to close their shops and close their doors because of a lack of income. But I imagine business owners are really feeling this interest rate increase as well. What's your numbers telling you? Are we seeing businesses downscaling, perhaps not making their monthly rentals, heading into a bit of a credit issue with their creditors?
So what we're seeing is that especially the retail sector and the office sector is still paying their rental, and it's still improving, although there's a bit of a slowdown. I think the bigger impact is the lack of uninterrupted power supply, especially within the industrial property market, where there is a movement of funds where say, do I pay my rental or do I ensure that I have uninterrupted electricity supply? We're expecting the commercial property market, therefore the tenants and their businesses, to start feeling the slowdown in the economy, especially towards Q3 and Q4 this year, where we will start seeing rentals being paid, but later cash flow is under pressure. Retail, although there is areas that has been recording record footfall and record turnovers, it usually takes a bit of time for them to filter into the payment of rental. And the consumers are going to hold back a little bit more. They've got a lot more expenses that needs to be paid. And those really impact on the smaller businesses. And we've seen those paying 25,000 Rand less rental a month in the commercial property market is starting to slow down in their recovery from COVID. And it's not yet on the pre-pandemic levels. And we doubt that they will reach it this year.
Maybe a final question then, because you make a very good point, Waldo, that those in the retail sector and the small business sector having to now weigh up, do they pay money towards the rent, which they don't have, or do they put in some sort of backup system, which is very expensive in order to make the money, in order to make the rent? It's a bit of a rock and a hard place, isn't it? I want to just flip around quickly. So you're talking there about those who are renting retail and commercial space. What about the owners of those properties? Are they coming to the party? Are they reducing their rental rates, or are they also in a position where they can't reduce their rates to make it easier for businesses and retailers to function?
A lot of the landlords and the owners of these properties definitely came to the party during COVID and assisted businesses. But cash, at the end of the day, you know, there's a limited amount going around. So where we moved from helping businesses to keep their doors open and to reestablish themselves post-pandemic, we then immediately went into our power crisis, and people had to then redirect money to ensure that they have backup power supply. So we're getting to a point where there is definitely huge pressure on cash flow, liquidity in the market for these landlords to allow for late payments, to reduce their rental, to bring these pressures down on their tenants. And also because we've had de-escalation during the pandemic period, there's a bit of catch-up that needs to take place. And considering now that rates and taxes are increasing, the cost of doing business is more expensive. So all these factors are continuing to filter into the landlords and the property owners' budgets, and they cannot just continue taking up these additional expenses without increasing their rentals. As I mentioned earlier, cash flow remains under pressure, and they also need to run their businesses and make sure they provide their suppliers. So it's a very precarious part of the cycle where we're in now, where tenants do need relief, but landlords also came out of a very hard time and is trying to make sure that their tenants operate, but they also need to make returns at the end of the day.
Absolutely. The circle of life is getting more and more expensive as the weeks go on. Waldo, thank you very much indeed for joining us. Fascinating to hear how the retail sector is managing to cope at the moment as well. But very interesting point that Waldo made, that maybe we'll pick up with someone in the property sector and the banks maybe, as the number of people selling their houses and moving rather into the rental market. Are you one of those? What's that like? You're welcome to tweet us at eNCA. Maybe a discussion for another day. My thanks to Waldo Marcus from TPN Credit Bureau.